The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 11th terrific Thursday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific Thursday. Let's make sure that we do everything we can, have an extraordinary afternoon, extraordinary evening. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, that one little 2x4 makes all of the difference in the world. It means that you and I can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go look at the circumstance of the markets. We'll go see what the bulls and the bears are doing out there. I'm absolutely grateful for your presence here today. I'm here to serve you. Very simple. I'm here to serve you. So feel free to pick up that phone, dial on in. We can talk about whatever stock, whatever commodity, whatever currency, whatever it is that you're looking at. I'll do everything I can to assist you and throw another set of eyes on that chart that you're taking a look at. Of course, just dial us on up at 877-927-6648. Of course, internationally, we'd love to hear from you as well at 727-445-1044. This is Terrific Thursday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 54 points. She's trading at 18,054. S&P's up 5. Composites up 5. Russell 2000 is flat out there. The DAX finished the session up 67 points. The FTSE up 16. Goldilocks back about $7. Silver down 2 pennies. Platinum looks like that's off about $10. Light sweet crude off 90 cents. Lead the charge dollar-wise. The upside, you got Receptos Inc., RCPT, BioTi Therapeutics, Biogen, Intercept Pharmaceuticals, Citrix, Amazon, Harman International, Health South. They're all to the upside, $4 or more. To the downside, Netflix taking a little bit of a breather off $8, Regeneron down $8. No big deal on either of those two. Criteo down $6. That's down about 12%. We'll look at that. Mercado Libre, 58.com, Ambarella, all about $4 or more to the downside. But let's begin the day by figuring out what are these markets doing. Let's go take a look at each of the index, or many of the indexes out here. Let's start off by taking a look at the Dow. What do we know about the Dow? Let's go ahead and blow this chart up on my screen out here. So here's a couple things we know about the Dow. If we just take a look at the all-time high, was generated on May 20th. That high's out at 18,350.13. If you go from that high down to the low that was put in here, this was 2 days ago, June the 9th, that low, 17,714. What you're going to find is that the Dow Diamonds have hit, almost to the tick, they've hit the 0.618 retracement level. Now, that number is 18,107.50. The actual intra-session high is 18,109.77. Now, many might say, hey, this is the perfect time for the Dow to go ahead and set up the C point of an A to B equals CD to the downside. And, in fact, you may be right because it's made a 0.618 retracement. What else do we know about the Dow? Well, two things. Number one, we had this little descending price channel that it had been traveling in. That's the yellow line going across my screen. In fact, let's get rid of that purple line. It's kind of ugly out there, that midpoint. We really don't need that midpoint. There we go. That makes it a little bit cleaner for us. And so we know that price has broken to the upside. Will the 0.618 retracement level be the C point of an A to B equals CD to the downside? Well, to answer that question, we need to also go and understand the strength that's going on inside of the Dow. And we'll take a look at the summation index. We'll take a look at the price oscillator. And what I can tell you that as of right now, which is 1:11 p.m., If the market were to close here, I would tell you that the Dow is going to do more than a 0.618 retracement. In fact, the Dow now is actually in bullish territory when I take a look at what buyers and sellers are doing out here. Once that price oscillator gets above zero, which is where we're at inside of the Dow, no idea what it's going to look like at 4 p.m. because this is really a great end-of-day tool versus an intraday. But on intraday, you get an idea of what's going on strength-wise inside of the market. At this stage here, this says that the Dow is going to go ahead and at least get to the 0.786. I would argue, and I won't argue, what I will communicate, what I will say is that at this stage of the game, what's being communicated to me by the markets is that the markets are going to go back all the way up to their highs. In fact, take those highs out. That's right. We've got July 4th coming in about 3 weeks or so. What we should expect, what we should anticipate is the markets are going to move higher in through the holiday and beyond that time period. A great start yesterday. Huge bullish reversal signal here yesterday, the kind that you don't want to see if you are a bear. Nonetheless, the Dow has made the 0.618 retracement. It's a place where somebody could go ahead and take a stab. But the messages are fairly clear when we put this together with the summation index. That the Dow wants higher price. Let's go take a look at the S&P 500. Let's go see what maybe doesn't want higher price. Now, in the case of the S&P 500, what it actually did was it created a Gartley buy pattern. It confirmed a Gartley buy pattern yesterday. Now, what's a Gartley pattern? Look, a Gartley pattern, the beauty of the Gartley pattern, if you go to his book on page 222, the beauty of the Gartley pattern is that it gives you the opportunity when there's been large moves in any one direction for a low-risk entry into the trade. Now, what I have learned, my experience, is that the Gartley patterns, one of the characteristics, they've got an A to B equals CD to the downside. Here's the S&P 500. In fact, let me do this. It'll make it a little bit easier for you. We'll take this one step at a time. Let's go ahead and get rid of the Fibonacci numbers out here. Let's do that. Here's a clean chart. In fact, here's a real clean chart. Now, if we take a look at the A to B equals CD pattern inside the S&P 500, it'd start with that all-time high on May 20th. That's out at the 2134.72. That's your A point. Your B point out here was down on the trading day, the low of May 26. That's out at 2,099.18. Makes a 0.618 retracement, really 63.98 was the exact percentage. That's why in the Dow, hey, you can understand making a 0.618 retracement if you're leaning towards that the market has made all-time highs, that then you can say, okay, that's where you take a step. You can see how the markets can reverse here. Well, if you take a look at what the S&P actually did yesterday, was they made a 1 to 1.272 A to B equals CD to the downside. Now, they did that 2 days ago. Yesterday, though, they confirmed the Gartley buy pattern. Not a sell pattern, a Gartley buy pattern. And what you had coming together here were really the beauty of the A to B equals CD pattern, confirmed by a huge Morningstar reversal pattern. Took back a couple of days worth of trading out there. Very bullish pattern. And at the same time, it was making a 0.618 retracement. From the lows out here, let me get rid of this. We don't want that. We don't want that. There we go. From the low down here on the trading day of March 11th, that's what we're using as our first retracement level area, our first X point, so to speak. If we go from that level all the way up to the highs out here, the all-time high, you can see that price, the actual 0.618 retracement there to the downside was 2,075.99. Price actually got down a little bit below that. So if you're one that is in the 0.618 retracement camp, which one do you take at this stage here? Big, powerful move yesterday. Now, where is it that price is headed to? Let's go see what kind of retracement we've done thus far. And the retracement that I'm looking at, let me turn off the A to B equals CD now. I'm looking at the retracement from that high from May 20th to the low from a couple days ago. You can see that price right now is trading right at about the 0.618 retracement of that level. 2110 is the actual number. You're trading at 2109 and change out here. Wide-ranging bar, though, coming into that move yesterday. Really good chance what the S&P wants to do is move up into that 0.786. And if it's going to do that, what it's going to actually do, it's going to go ahead and tag that May 20th high. So the S&P 500 wants to go ahead and get out back to those highs. I would say more likely than not, the S&P 500 is going to go ahead and take out those highs. Let's go take a look at the NASDAQ composite out here. NASDAQ composite up 3 points, no big deal, trading at 5,079. What is it doing? Hey, what is it not doing? What it's doing out here is it's trading inside its all-time swing point high, and that's from the trading day of April 27th. It doesn't matter whether it's with volume or it's not. As long as it trades above 5053.54, the only logical conclusion that we can make is that it wants to go test the high of 51.1983. You are trading, as I say, at 50.80.22. Let's just take this one step at a time. It's what's the message of the markets. I am agnostic as to whether, it's bullish or bearish out here. It's what is the market actually communicating to you and I? Well, let's go back and take a look at that summation index now for the NASDAQ composite. This thing has been up and down above the zero line here really for the last week or so. You're back up above that level. Basically, buyers have control. Anytime sellers have even tried to step foot inside of the composite, they've gotten walloped on the side of their head out here by the bulls, and the NASDAQ composite wants to go test that high. Of course, what you and I also know is that over the course of the longer term, with regard to the NASDAQ composite, it really needs to get up above 51.1786. On its weekly basis, that happens to be a horizontal trading range. It's actually the midpoint of their trading range boundary lines that it's traveling within. Nonetheless, that is a significant level of support. What we also, or resistance, but what we also know, what you and I know, is the red dash lines on my screen out here. Those red dash lines are the monthly levels of support or resistance. And on a monthly basis, even though over the course of the last several weeks, price hasn't done a whole heck of a lot, what we do know is that inside the NASDAQ composite, it's up above a monthly horizontal trading range that continues to act as support. Once we see the NASDAQ composite bust out the 51.18 level, expect to move up to 54.14. That is what it plans on doing out here. If we continue taking a look at the indices out here, let's go take a look at what's going on inside of the Russell 2000. Strong like bull. What I can tell you is that bear markets, the Russell 2000 does not lead to the upside. The Russell 2000 leads to the downside. Now, the Russell 2000, the index versus the ETF, slight difference because you're accounting for, in the ETF, you're accounting for fees and you are accounting for any dividends that might be paid out. Well, in the case of the Russell 2000, if we take a look at the indice out here, we can see that it's dealing with that swing point from April 15th, the bottom of which is 1268.82. You're 1266 right now. Yesterday, you moved into that level with volume. Today, the volume isn't out there. A lot of volume was expended yesterday. Really not a big deal. You're pushing inside there. Now, if it closes below 1268.82, somebody could say, hey, you tested the swing point, the bottom of the swing point with light volume. You got a rejection with both price and volume. And I would have to say you're absolutely right. Now, the ETF, you can see it moved. Well, when we take a look at the ETFs, you'll see that the Russell 2000 moved out there. Look, there's another tool. I shared it with subscribers on Monday, I believe it was. In fact, you recall when I came back to the air on Monday, one of the first things that you and I did was we took a look at the long-term charts out there. And you heard what in my voice? You heard conviction. You heard conviction in my voice that this market wanted to move higher. That was in the face of most everybody else that is ambivalent. You listen to the news stations out there, and you've got a lot of folks that are ambivalent. There was no ambivalence in Stevie's voice out there. And why was that? Well, there were a couple tools that I shared with the clients on Monday, new tools that I shared with clients so that we could go historically take a look at what's going on. And I can tell you that that tool was telling us both in the S&P 500 and in the Russell 2000 that there was no way that what it wanted to do was move lower. What it was telling us it wanted to do was move higher. But that's what these markets still want to do. This is Steve Rhodes with TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow at 52, S&P is up 5. Let's go back to the indices out here. I believe we stopped just short of taking a look at the NDX 100. So let's go take a look at the NDX 100. Right now, it's trading out at 44.8970, sitting right on top of its 0.68 retracement off of its high out here, the high that I'm using. Actually, not the all-time high. It's the high that I chose, at least for this moment, was the the May 27th high, down to low from a couple of days ago. Looks to me like what the NDX 100 wants to do is at least go tag the April 27th area, and I would say more than likely go ahead and try to bust out those highs. That's what's going on inside the NDX. Let's go take a look at the New York Stock Exchange. Now, in the New York Stock Exchange and the Dow out here, we've got two beautiful and I do mean beautiful Gartley buy patterns. So if you're a person that likes the Gartley buy or sell pattern out here, you got the Gartley buy, inside the New York Stock Exchange. So the wider swath of the market just gave you a huge Gartley buy signal yesterday. You've got your A to B equals CD to the downside. Looks like I turned that off here. Let me come back and turn that on. Where is it? There we go. Okay, so if we take a look at what the New York Stock Exchange actually did, made a nice 1-to-1 A to B equals CD to the downside. That price objective 10,916 and change. Actually, intra-session got a bit lower, closed out its session though at the 10,915 level. Then yesterday you get that big old bullish reversal signal. Now, like any Gartley pattern, you've got really 5 potential outcomes here. Outcome number 1, that was achieved yesterday. You know, like slicing through Kerrygold butter with a hot butter knife out there by creating a wide-ranging bar, breaking through that 0.382 retracement. Today, price trying to get back to the 0.68 retracement level of 11112 out there, and hasn't been able to get up to that level, but it will, and then it'll go ahead and head on off to the 0.786 retracement level at the 1,175 before it gets all the way back up to its highs out there, and then there's always the possibility that Gartley buy pattern here turns into an A to B equals CD to the upside. We'll deal with things one at a time. Right now, the next level that the New York Stock Exchange is trying to get up to is the 11,112 area. We'll see what kind of bar it generates coming into that area. But a nice Gartley buy pattern inside of the New York Stock Exchange. They don't happen all that often, but you got it yesterday with a big, huge confirmation that it's tired of being socked around here. And but however, I will say this: even though we got the nice confirmation there, you still can't back up the truck out here, because when we take a look at if there is any weakness, it is inside still the New York Stock Exchange from the standpoint that its price oscillator is still below zero. Our reading on this is minus 49. That does not just means it does mean that sellers in essence really still have control of the NYSE, but I would argue that it's really waning here. You've broken through a descending price channel. It's only a matter of time. It's only a matter of days before that price oscillator gets above zero. But here's the deal. If the price oscillator gets above zero inside the NYSE, and it needs, today it needs, like, I don't remember, 1,300, 1,400, 1,500 net advancing issues. Doesn't look like it's going to get that today. But if it does, don't be short the market, not unless you see some other real significant pattern, maybe a butterfly or something else out there. It's just telling you that the market wants to move higher out here, and that's inside the New York Stock Exchange. What other indices can we take a look at? Let's take a look at the XAU. XAU and the HUI, we've talked about this for the last couple of days here. You've got your hammer candle that's being tested, $67, even Steven from June 8th out there. The actual intra-session low that we've seen is $66.95. Now, if the bulls are going to be able to hold up the XAU, you will not see a close below $67. If you see a close below $67, it spells curtains out here. Now, yesterday, I laid out for you my belief about what gold and silver are doing, and they're going downtown. They're going to be headed downtown. Why? I can't tell you. That's just simply the message of the markets as I take a look at different tools out there. And we'll get a confirmation, in my opinion, of that if we see a close in the XAU below that $67 area. If it holds, then not so fast is really its message out here. But any close below $67, you're going to make a move all the way back into the swing point here from March 11th. Inside the XAU, that'll take you 62.48 to 64.94 out there. You've got a 1-to-1 A to B equals CD to the downside at 61.79. That is its message as we speak. If we go take a look at what's going on inside this semiconductor index, the SOX out here, let's go see what it's doing. Weaker than markets, so as the sectors go, it is, it is a weak indice out here. It's only made the 0.382 retracement. And that was even with yesterday's move out here. And that's at 722.55. That's what's going on inside of the SOX. We get back from this breakout here. Let's go take a look at other areas of the markets. Maybe we'll run through the ETFs for you quickly and anything else that you'd like. This is Steve Rhodes with TFNN. It is Terrific Thursday, as always. Great to be with you. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
He's a 5 had a request come in, said would I take a look at the Wilshire 5000, which is similar to really taking a look at the New York Stock Exchange, only the broadest of the indices out here, the Wilshire. And, you know, I've mentioned that the Dow, the New York Stock Exchange, and Wilshire as well now has formed the Gartley buy pattern. And they are they're unusual. They don't occur all that often. But when they do, you've got to pay attention to them. And so, to put this together with Monday, when I came on the air and was sharing with you that my read of what the markets are doing out here, because of the position that the Russell 2000 was in, because of the position that the NASDAQ Composite was in, was that the market was just searching for another bottom out here. And if we take a look at what the Gartley pattern is really intended on doing, it's really to allow you to find an entry point into the markets out here. And if you just simply come back to the lows back here in October of 2014, there's only been 2 Gartley buy patterns that have set up inside of the Wilshire 5000. The first one was right here. This occurred off of its high from the trading day of April 27th, makes a low on April 30th, and then makes a retracement up here on May 4th. Makes a 1-to-1 A to B equals CD to the downside out there. That was your first Gartley buy pattern. What did that lead to? That led to the 4th outcome. Remember, there's 5 outcomes of every Gartley pattern. The 4th outcome, 100% move, getting back up to its highs out there. Well, fast forward to where we're at today. What have we done, or what did we do yesterday? What did it do yesterday? Well, yesterday it formed an A to B equals CD. It went ahead and formed and confirmed even much more stronger than the pattern that had occurred back here off the April 27th, because here you got a clear and convincing bullish reversal signal out here. So if the last time the Gartley buy pattern sent you back up to the highs, I'm going with the thought process that this time will be the same outcome. Really, what it did last time was you went to new all-time highs. I expect we'll see the same type of pattern occur. The Wilshire 5000 ought to get up to the 22,536 and then change level and make a new all-time high out there. So you've got the Gartley buy patterns. It's not that they can't fail. They can. And if they do, the failure on this would be a close below that session, that low from June 9th out there, 21,923. I cannot control what the markets are going to do. But what I can do for you is I can read for you exactly what patterns that are out here, bullish or bearish, and what type of action is that you should be taking out here. So if, in fact, on Monday you were saying, Rhodes, he doesn't know what in the heck he's talking about out there. He's calling for a bottom. And then that has happened, and then we've got the Gartley buy patterns. It's got to make you say, something to think about. Let's go take a look at what else is moving in the markets out here. Let's go take a look at what's going on currency-wise. If there's a headwind out there inside the markets moving higher, well, it's in the euro, Japanese yen as it's backed off its move higher just slightly. At this stage here, we can see that it worked itself into an overbought condition and really just been working sideways out here. So is that anything for us to really be concerned about? Nah, not really out here. Well, that's not good because it looks like the system here just shut down. That's okay. I've got a backup of this. Oh, there we go. We're back up here. In any event, with regard to the euro, Japanese yen, no big deal out there. If we go take a look at what's going on with regard to the euro versus the U.S. dollar index, the reason you're seeing a move today in the U.S. dollar index to the upside, it's up 50 cents, trading out at 95.16, really brought to you because of the euro and the Japanese yen, both going against the U.S. dollar. If we take a look at the euro out here, pulling back a bit, not a big, huge deal out here. It's very possible that what the euro is doing is actually making an A to B equals CD to the upside. If, in fact, it can take out the high here from May 15th, that's the pattern that would, in fact, unfold. If we go take a look at the Japanese yen, trade out at 123.58 out here. Japanese yen over the course of the last couple of days has moved off of its highs in a fairly large way. You're seeing a bit of a bounce here. I can't tell whether that is a bounce and it's just setting up a B to C of an A to B equals CD to the downside, or if it's going to go back and make a run for that June 5th high out there, and that is on the Japanese yen. Let's take a look at some of these stocks that are moving inside of the marketplace. Let's go take a look at what's moving to the downside here. Let's go see where the damage is being done, if any at all. Regeneron Pharmaceuticals, let's go take a look at now. Yesterday, gapping down with mucho volume here, but the gap down, which was with 1.8 million shares, guess what? Was just moving into its TAS market profile support level out here. And it's got a new profile today. It's trading just below. That profile's low is 503.14. It's just occurred today. I'm going to go with yesterday's low as being a key level for Regeneron Pharmaceuticals. If it can close below 498.60, then that sends off some lower prices. Where would those lower prices take you to? It ought to have pretty good support. Regeneron RGN at the 462 to 483 level out there. That's what's going on in that ticker symbol. Netflix is off by the devil. It's off by $6.66 out here. Having an inside day after gapping up with big volume yesterday, 8 million shares. If it has an inside day, the message of an inside day, it's very clear. The trend that it came from continues. That says Netflix wants higher price out here. If we go take a look at Cryteo SA, that's crying on somebody's shoulder this afternoon. It's down 11%, and it's down with volume out here. These look like more than just tears. Let's go see where this equity is headed to. Oh, this is a dangerous thing because this is volume off of the high, at least 52, if not all-time high out here. And when I say volume for this equity, that's 3.8 million shares. This thing busted out big time. Sign of strength back on the day of November 5th, 2014 with 3.3 million shares. Now, it's nowhere near that breakout level, but it looks to me like that is where Cryteo is very likely headed to. Currently trading out at 45.29. Also to the downside, Mercado Libre, MELI, is its ticker symbol. It's down so far today with 300,000 shares. Is that any kind of a big deal? No, not really. You know, you'd love to be able to pick this equity up on a pullback with light volume into the 115 area. I'm not saying that's where that is headed to. I'm saying that's where it would be a nice buy. I ought to find some support out here. Most recently broke out around April 28th, somewhere around the 139 area. That's where Mercado Libre ought to find some support. Let's see, what else do we have out here? Anything of any significance? Global Partners, GLP, is the ticker symbol. Not to be confused with Emerson, Lake and Palmer. That would be ELP. This is down with some big volume today. No idea what's behind the move. Big volume for it, 1.6 million shares out here. That says it travels back to the March 17th levels in the 33.58 level, or 37.03 as we speak right now. To the upside, though, Receptos Inc., RCPT, up $8 and change. That's up 4.5%. Looks like this is swinging for the fences. Its fences would be the April 1st day out here. That high was 203.25. You're trading at 188.99. That was a high volume high, 3.2 million shares out here. Receptos Inc. looks strong like bull. If we take a look at Intercept Pharmaceuticals, that's up $7. That's trading out about 3% to the upside. What is Intercept Pharmaceuticals doing? What is it doing is really the question out here. Broke a swing point. That was from April 30th. That had 590,000 shares, and it broke it with light volume. So what looks like it was a false breakout. As long as it can get back above 247.60, then it says that the breakout to the downside was false. Ought to find resistance, though, because it's got a supply line. That's ICPT between 260.57 and 290 even Steven out there. Let's take a look at Bluebird Bio. BLUE is a ticker symbol, up about nickels, all nickels, 555. That's 3% out here. What is it doing? Lazy, crazy, hazy day of summer is what it's doing. It's going to go swing for its fences. That's the May 29th high at 197.35 or to the 189.50 or 187.83 as we speak right now. And that is on ticker symbol BLUE. What do we got out here percentage-wise? Well, you've got BioTi Therapeutics. That's up 35%. We'll just simply skip that because they've cured something out there, and that's a good thing. Let's go take a look at Health South Corp. HLS is a ticker symbol. That's up 9%. Wide-ranging bar. Very wide-ranging bar. Very pretty bar. Of course, that bar is going against a nasty-looking set of bars from May 1st. Looks to me like Health South Corp, unless it can take out its highs, which would be the April 28th, 47.96 area. This is really just going to go ahead and continue to consolidate somewhere between 41 and 47 bucks out there. HLS. If it can take out that high, that would be good news, and that would set up a move probably equal to about $6 or so. So probably about a $54 move inside of Health South Corp. So that's what's going on a handful of equities inside of the marketplace. Let's switch over. Let's go take a look at Goldilocks and silver. Stevie giving giving you his prognostication with regard to gold. We want to pay attention to the HUI, the XAU, both of them. The HUI also has a hammer candle. Let's go see if that actually has been tested here. This is that's the gold contract. We'll come back to the gold contract in a minute. Let me give you the HUI. And, oh, son of a gun. I'm glad. Thank you for asking me to do that. Thank you. Thank you very much. The actual hammer candle inside of the Amex Gold Bugs Index, that low is 157.79. You're trading at 156.78 out there. That spells trouble. That spells double trouble out here. So the mining equities are the first ones to give us an indicator. Now, I got to put this in perspective. Inside the HUI, it ought to find support or test 154.46. That's not down too much more. But I think breaking that hammer candle actually means more than that when I take a look at what's really going on inside of the metals complex out here. And let's not get too carried away with regard to, the interaction between gold and the dollar. And you got the dollar up 55 cents. So gold's, doing pretty well out here. What gold has been doing is basically been traveling in this little box out here. That box takes you in between the 1150 to the 1232 area. Great for intra-day type traders out here. You can make a bundle. But with regard to taking a long-term position out here, frustrating because one day, one time period, you think, hey, maybe the Bulls have got it, then the Bears have got it. Now, we don't have a break of this area. My suspicion is we're going to see a break of 1143.80, and that's going to go ahead and take Goldilocks down into the 1067, more likely the 1022 area, and that's my call as we speak right now. But you got to keep things in perspective. Until it breaks 1143, it could easily go up and test 1232 out there. And when it breaks either one of those areas, then, if it breaks 1232, I was wrong. And you can take that one to the woodshed out there, and that says the price would then go test the 1309 area. But otherwise, the thought process here, and I think it's the mining equities are giving us the advanced warning out here, is gold's going to take a dive lower. Is it going to be the fact that eventually maybe Greece and Europe, go ahead and come up to some type of amicable deal out here? I don't know. But, what's kind of interesting, you got to stop with the stuff. But what is kind of interesting is with whatever uncertainty there is that's over there, it's not affecting gold. Gold is what it's a fear currency out here, and gold ain't doing bo diddly. In any event, let's take a look at then. Silver's not doing much either. Silver's now flat for the day out here. Basically the same kind of pattern inside of silver. A to B equals CD to the downside, but it's got to take out the low here from April 24th. So until it does that at $15.59, it's just kind of hanging out at that swing point here from the trading day of April 24th out there. That's what's going on inside metals. Let's go take a look at light sweet crude. If we take a look at light sweet crude off 58 cents, trading out of 61.24, just kind of hovering and coiling up at these highs out here. It looks more likely than not to me that light sweet crude is going to, light sweet crude, let me see this. Let's actually do this. It would be foolish for me to tell you what light sweet crude is thinking of doing without looking and seeing what the Mexican peso and the loonie is doing, because you'd have to be a lunatic, or Stevie would have to be a lunatic, to suggest to you what light sweet crude wants to do without taking a look at those currency pairs. Of course, you say, well, why is that? Well, the reason is because the Canadian dollar and the Mexican peso do a better job of tracking the oil complex than any other currency pair that's out there. And they oftentimes give us a nice advance warning out here. So that's why I'm taking a look at the center portion of my screen, which is the U.S. Canadian dollar out here. That looks okay. We can see it did a bit of a retracement out here after the highs here, or the close from May 11th. The same thing with the Mexican peso out here. So I'm not seeing these currency pairs fall apart. If they were falling apart, they would give us an advance warning that light sweet crude maybe is getting ready to go further south out here. And I'm not really seeing that when I take a look at the currency pairs inside of the market. A request to go take a look at bonds out here. If we're going to take a look at bonds, let me see here if I pull up my 30-year Treasury page out here. This does not have the current contract, so we got to switch that. That would be bonds ought to be, what is it? What is it? Help me out here. Is it the U contract? Is it September? Is that possible? Let me see. What do I get? I have it out here. I want to take a look at bonds. It is no, it is not. It is the so yeah, this is a September contract. So let's go back here. Let's go change this up. Give me a moment to do that. Just update this chart here. Give me a moment to do this here. Come on, work for me. Work for me. We're on live television. So as we take it, I've got the continuous contract. That's in the center portion of my screen, the TLT off to the right. I'll have to take a look at bonds when we get back. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year market-safe futures economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 67. S&P is up about 6.5 points. The composite's up 10. The Russell 2000 up $1.50. It should be a nice summer for the markets out here. They ought to continue moving higher for the next 3+ weeks. That doesn't mean it's going to be a one-sided trade out here. If anything, 2015 ought to continue, with update. One day it's good for the bulls, next day it's good for the bears out here. We've got wonderful Gartley buy patterns that have formed inside the New York Stock Exchange, the Wilshire, the Dow out here, and they've been confirmed with huge bullish reversal signals out there. We'll see if, in fact, they were part of the message of the markets that they want to move higher. With regard to bonds, going back and taking a look at bonds out here, we've got a nice little reversal that's going on today. In fact, it's if you take a look for bullish reversal signals and candles, it's the first actual truly bullish reversal signal of any significance that we've seen in quite some time. The problem is there's no real pattern that I can see with regard to today's action. So I don't have an A to B equals CD. I don't have a Chapman wave count that makes any sense to the downside. I've got an expansion of a set of swing points. That's the best that I can come up with, which is the expansion of the swing point low from May 12th to the high of May 29th, and you've done a 1.272 expansion out there. What I would say is that until bonds right now, if you trade bonds, there's several secrets. The one secret it's not one of the secret patterns, and I've shared that with you in the past. It's not in play right now, so there's no reason for me to waste your time. But I will tell you a wonderful moving average with regard to bonds. So in short of a pattern, a buy pattern or something like that is set up, such as like a Gartley buy or maybe a Chapman wave count, maybe something out there. Short of that, what you're looking at is a counter trend rally. And bonds will not change, from my standpoint, they will not change their polarity until you see it close above the 39-day exponential moving average. That's the line you want to put on your screen. If you're trading the TLT, make sure you get access to the actual bond contract. So that you can, because you're going to find that the underlying instrument is going to be more accurate for you than trying to read what goes on inside the ETF. Nonetheless, at that stage right now, inside the 30-year Treasury, the bears have got, the sellers have control until you see a move above that 39-day period. EMA, right now that's at 153.31 out there. You're trading at 150.03. So that's what's going on inside of bonds. I can anticipate a counter trend rally up into that 39-day EMA. If it closes above that, whole different story inside of the market. That's what's going on there. So to kind of summarize this for the next minute out here, as I mentioned, as I take a look at, let's just say 120-minute charts here for the ES Mini, it's trading. All it's done today, it moved all it's done today. It's done a lot today. It moved back above. It moved above its task market profile high. That was resistance. It's come back and it tested that area 2108. As long as price stays above that, you can expect a move higher inside of the ES Mini. That's the 120-minute time frame chart out here. Still looks very bullish. If we go take a look at the Dow 120-minute time frame chart out here, same thing really. It's gotten above its task market profile resistance level. That's at 18,038. As long as price is able to hold that, we ought to see the Dow move up to higher prices. And we'll just finish this off by taking a look at the NQ. We'll stick with that 2-hour chart out here. It is the one that is struggling the most out here. However, I'll just simply come back to the NASDAQ composite, and that composite, it's got the bulls are in charge, the buyers are in charge. That price oscillator is above the zero line. Talk about being in charge. Our man David White, he's up next, as he says, the lovable, squeezably soft David White. So stay tuned for his show, the Tom O'Brien Show, and then because it is Terrific Thursday, the Andy Heck Show will take us home. Have a great Thursday, folks. Look forward to seeing you tomorrow afternoon. Take care.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.